Amitav Mukherjee to please join us on the dais.
We have not received the experience what you said yesterday. We have still not received.
Okay. So you have registered online. You have registered online and you have not received. Jyoti को लाइए. Jyoti को X.
मेल आईडी में देने के बाद भी नहीं आ रहा है.
Those who have not received the PPTs and the materials, I would request them go to our website. In the members section, there is a background material section. In the background material, you will find there the refresher course, and then there is 3 download. All the 3 in one. There is a PPT. In another there is the India's text of India's. In the third one, whatever the handouts which we are giving, we are subsequently uploading. So please download from there. This is the one way. And the second one, we have already sent emailed it to those who have online registered. Jyoti, somebody is saying he has registered online but he has not received. So there is some.
I am having out-of-line registration. What is that?
Sir, okay. Sir, let me announce it again. You please go to eirc-ici.org. Under the member section, there is a background material section. In the background material section, we have started uploading the materials of every seminar. So for every seminar, not for this refresher course. If you eirc-ici.org. This is our website. eirc-ici.org. This is our website. You please visit our website. Under the member section, there are some certain sections. And resources and members may also be.
Resources.
There are 2 links there. In the resources also there and member section also there. You go to background material. In the background material, you will find for every seminar, not for this refresher course. For every seminar, you need the material you can download from there. So you will find the refresher course that is mentioned in the first there, and there will be 3 download links. In the one download link, there is a PPT. In the second download link, there is a text of India's. In the third download link, or bulletins that has also been uploaded. Okay. So you please download from there. That will be better. Yes.
The one presentation which is being given by the speakers, that's not the same as the one which is there.
Okay. So what we are facing the problem, some of the speaker has not shared their PPT. We had emailed to them to share with us. Like Dina, yesterday she told that she will send later, but when she will send that we don't know.
Subsequently it will get
Subsequently it will be uploaded if we receive. We had emailed.
That is why there are 3 folders separately.
So what we did, we have uploaded the PPT of other speakers. That is why we have uploaded the other speaker. Okay. So this is the problem. Some of the speakers do not want to share. Frankly speaking. So what we can do, what we have shared the other PPTs, you can download that PPT for the meantime. So schedule also that has also been we had circulated. This is the revised schedule. We had given the Xerox, and we had also given the members were facing the problem from the back. Members sitting at the back, they were the letters they are unable to see. So what we did, the examples which are there in PPT, we had made these handouts of the examples. So members at the back, they can read from these handouts. And you know that this is the first time we are organizing this refresher course. So problems will come and we have to overcome those problems. So with this spirit, I would request Runit to please come forward and offer a dry fruits bouquet to learned speaker.
Just
Request everybody to put your names together. I would request him to please start his deliberation.
Sir, follow it.
Again, can I request you to start from that income tax? If you can start that from the, you have left some portion, if you can start that. And if needed, we can extend 1-2 days. That will you will love to join. If we extend 1-2 days, you will love to join. Right? So we can extend it to 1 day, no issue, 1-2 days, whatever the need is.
Good evening, everybody.
So we start from whatever you, the portion that you get.
Yesterday, our past president came, Mr. Suod Agarwala. I was speaking to him in the night. It was a confession from me that I was not very happy yesterday because the time was too short for me. So he told me one thing rightly. Well, you see, India's 12 is the master standard. It has application everywhere. If you believe in God, you need to believe in devil also. You cannot imagine Ma Durga with Osura or Ma Kali with what is that is called? Kharak. So if you believe in income, you need to believe in tax. So income and tax are two flip sides of the same coin. So first you give me your feedback regarding income, how much you have learned. Have you gone through all this? Standards, have you gone through any of you? What is there in the standard, the original text that you are supposed to go through? No.
In standards we have gone, not all the.
I talk about India's 12.
Sir, what I will request everybody, the schedule has already been given to you. The PPT is there in the website. You download the PPTs and कल का जो schedule है, you please open that and read it at home and then you come. That will give you the better input.
We have to take all these from the afternoon.
No, but the PPTs are in which website?
EIRC-ICI.org.
You can send an email and everything reply. You can telephone. My website number is there.
Yes. You go to the resources section.
It is there in every slide.
Under the resources section.
IFRSdemystified.com. You can get in touch there with me over mail, over telephone. Only
So there are other materials, Mr. Mukherjee, there are other materials also which we are giving.
Yes.
So I request you please go to the institute's website, eirc-ici.org,
And the member section.
and under the resources section, you will find a background material. Background material, on the first day, refresher course is there. You can download.
Now, today our topic is earnings per share and cash flow statement. Now, the first thing is, I read one article in UK. The name was, Alakate accounting cannot provide any information. You see, in BCom classes, you will see first year what is taught. Profit and loss account, balance sheet. In third it is taught cash flow. EPS is taught separately. So here these two topics for today are part of Ind AS 1. So Ind AS 1 preparation of financial statements includes this earnings per share. What is the most important figure in statement of profit and loss? That is the earnings per share. Then it is the cash flow statement. So we prepare two balance sheets. One profit and loss along with other comprehensive income. Then it is statement of changes in equity, the new thing. Then the closing balance sheet, and lastly the cash flow statement. And profit and loss includes, so how it looks at a glance, the new financial statements. You see this example 1, structure by nature. How it looks. Today I will tell you only relevant items. You know very well what is cash flow statement, what is operating, all these things. I don't need to explain that. What is direct method in the method, or what is EPS, how it is different from previously, what are the new things that have come. First you see there is current, non-current distinction. So first item you see that is property, plant and equipment. It includes everything. It includes what? Land, building, plant and machinery, motor vehicle, furniture, everything. Now suppose land and building, okay? If it is in used for the business, it will come under that property, plant and equipment. If it is not used in the business but let out to tenants or taken for capital appreciation, it will be part of the investment property. And if it is meant to be sold, there is one separate heading that is called non-current asset or disposal good held for sale. That is what? That is don't apply going concern concept. That is all, if I cannot follow going concern rule, I follow the liquidation rule. They are all taken in one figure. What is the total amount? That includes many of the assets. It is not only just my land and building. So it can be either one individual asset or it can be a group of assets. Second, we have intangible assets. Third, investment in debt instruments, investment in equity instruments. Now, if it is non-current, fine, but if it is current, it can also be quite possible that it will be part of my cash and cash equivalents. There is a rule of thumb. Practical way of do something may not be actually correct. If it is within 3 months, I will tell you, it can be a part of cash and cash equivalents. Now, deferred tax assets. What is that? I told you. Deferred tax liability also, that you have known. I am coming to that again. I am repeating the whole what you have said. Repeating the whole thing yesterday. Second thing, inventories. It can be current, also non-current. Then your trade receivable can be current, can also be non-current. Other current assets can also be non-current assets. Most important thing, one particular thing may be both current and non-current. So that we call the current portion of a non-current liability. Suppose I issued bonds, repayable next year. So for the last 4 years it was appearing as non-current liability. In this year it will appear as a current liability. Okay? Second thing is retained earnings, that is you know very well, other components of equity. What is this? This is the most new thing here, that we record all the adjustments, those who cannot find a place in the PL. Look at page number 3, statement of changes in equity. See how it looks. This is absolutely a new item. Share capital, there is no change. Have you got that? All of you? Statement of changes in equity. Share capital, no change. How it can be changed? If there is buying back of shares, if there is further issue of shares, it will change. Opening and closing balance. Retained earnings. You see opening balance 675, closing is 1684. Look at the balance sheet, this balance is there. On the first page, we wanted to show what is the changes because we always provide comparative balance sheets. Now how this thing is changes, what are the inflow and outflow in retained earnings? Profit is going, dividend is coming out. And most important thing I will tell you is for the reclassification adjustments that I am coming to next. That will affect everything, many things it will affect. That I am coming to next. Next use is other components of equity. This is what? It can be devaluation surplus, it can be adjustment for defined benefit plan, it can be your cash flow, hedge adjustments, there can be a big list given. Okay, so here you see that it was opening balance was 60, closing is 180. We all reconcile how this opening balance 60 is becoming 180. This total calculation is given here. Okay. Now these changes in equity items will come first of all from other comprehensive income. Look at the previous page. Immediately after profit and loss, you see, after profit for the period, you see there something is there in higher font, other comprehensive income. See the screen? Other comprehensive income, it is always net of tax. Remember, income tax is everywhere, you cannot avoid. If I am to teach you what is income tax, I need to take examples of all the standards, barring government grant. Otherwise, it has implication for all these things. So it is always because this amount is going to my retained earnings, my equity, and any equity has to be after tax. So here, what is appearing there, other comprehensive income, my revaluation surplus, everything has to be as per net of tax, and this will go to straight to statement of changes in equity. First one you see, revaluation increase of PPE, it is 240, 96 is the deferred tax liability deduction. So how much is coming there, you see, PPE column, 144. There is some revaluation decrease for the intangible assets. You see, it is minus. Fair value gain of debt instruments. You see, it is 12. I tell you, this is just the basic statement with no complications. The alarming thing is, you will have to prepare ultimately consolidated financial statements, remember. So you will have 5 consolidation statements. Consolidation of opening balance sheet, I mean when the shares are acquired. To find out what is your goodwill or capital reserve. In India it is called capital reserve. They call it as bargain purchase. Second statement, you have to prepare consolidated statement of profit and loss, that we know. What we don't know, how to prepare consolidated statement of other comprehensive income. Third will be what? Consolidated statement of changes in other comprehensive income. Then consolidated balance sheet, consolidated cash flow. These are the 5 things that you need to prepare. Next, if you see that other comprehensive income, what is appearing PL, everything recorded in the statement of changes in equity, and all coming at net of tax, because it is the deferred tax liability coming separately. Now, anything, some entries I told you yesterday can come directly to statement of changes in equity. I told you, if you read in days 12, everything you will find only one thing. Does it affect accounting profit? Does it affect taxable profit? Following of the transaction, they neither affect accounting profit nor the taxable profit. So first of all, people to mind that one transaction at initial recognition or subsequently, does it affect my accounting profit or my taxable profit or both or none? There are 4 alternatives. I get dividends, it affects my accounting profit, my profit will go up, no doubt about this. It has nothing to do, it has no income tax consequences. So it does not affect my taxable profit. Okay? I make some investment, I sell at a profit, the profit stayed going to retained earnings. It is not affecting my PL, but it might attract some tax liability. It will definitely affect my taxable profit. Depreciation. One portion affecting accounting profit, one portion affecting taxable profit. I have charged 75 rupees as my depreciation. Income tax allowing me 80 rupees. So there are 2 different things. Now peculiarly nowadays you see in this, certain types of transactions is coming, we are not quite accustomed to. First of all, the good example yesterday, Binaji was telling us decommissioning liability. What is that? That I take a plot of land Okay? Say for 30 years. I'll dig out, I take out all the natural resources. I'll extract. After that 30 years, land has to be returned. Dilapidation clause in the same condition it was given to me will be returned to him. So I need to spend some money after 30 years to get that back into the same condition. So today I find out what is the present value of these today. Say I take the land say for 30 rupees. Depreciation 1 year, after 30 years I return fine. I need to spend suppose 10 rupees. Today's present value is 10 rupees. 10 rupees, what is the entry I will pass? Asset account debit to provision. My asset will be increased, my asset will be, provision will be increased. So it does not affect either accounting profit or taxable profit. Suppose preference shares. Preference share I consider it as a liability. I charge interest on preference shares. I don't call it dividend. But will that be allowed to with reduction with income tax authorities? No. So it affects my accounting profit but does not affect my taxable profit. Here, the statement of changes in equity, everything is net of tax. I repeat, any transaction finding a place in OCI, other comprehensive income, net of tax amount will be recorded in statement of changes in equity. So changes in equity having two sources of transaction. One is coming from OCI, one is coming from directly. Another thing could be what? That is statement, convertible debentures, convertible financial instruments. I issue bonds, I give you 5% interest. Why? Because after 3 years, I will be converting those into equity shares. So without this conversion feature, the market rate is 10%. So what I convert and what I have received is two different figures. I have received 100 rupees today. I will be converting 100 rupees after 3 years. They are two different things. 100 rupees today, 100 rupees after two different things. So balance, what is the present value of 100? Just a minute. This difference is my equity portion that will come here. Statement changes in equity. Yes, sir.
So items in the OCI will be considered for taxation.
Each and every item.
Taxable income is up to.
Huh?
Taxable income is up to the PFL.
This is not, you are not paying tax on this. You are creating one liability.
But net of liability.
You are creating one liability.
One more question regarding
Yes,
government,
please.
government grant.
Huh.
You told it will not affect the taxable.
It is not taxable.
No, but as per the amended definition of income, any grant or subsidy received from the government would be taxable.
Any?
Subsidy or grant received from government.
If it is taxable, it can be. I don't know that much income tax rules. If it is taxable, fine. But common sense, you say what is given the standard, it is not. If it is taxable, then no problem.
So it will find place in the OCI or in the penal itself.
Government grant, PL. How much you take as this? When you get the government grant, it's a balance sheet item. Now, how much you will take to PL, that is your decision, for depending on your cost benefit analysis. If it is taxable, then you have to get on deferred tax
But
liability.
as per the express provision of the Act, the entire amount would deem to be taxable in the year of receipt itself, debarring all the whether the conditions.
If the entire amount is taxable, then you will have some deferred tax assets. Simple thing, you remember that I have two things just in front of me. One is the expense, other is the income. Okay? If my incomes, what I have debited is more than what is allowed, it's deferred tax asset. Opposite deferred tax liability. Tax base. What is tax base? I buy one asset. Okay? 100 rupees. At initial recognition, what is the carrying amount? 100 rupees. No problem. What is the tax base of the asset? How they define? The amount that will be deductible for income tax purposes in the future. If I buy one asset, how much I can avail of deduction. Enter 100 rupees through deduction, and the moment I charge depreciation, they say it will provide me future economic benefits. So at initial recognition, the tax base for an asset and carrying amount are the same. So if these two are the same, no question of deferred tax liability and asset arises. It will arise only when there is difference. Now at the end of year 1, I have charged 20 rupees depreciation. What is the carrying amount now? 100 minus 20 is 80. Income tax said no, you can avail of 25 rupees. What is the carrying amount as per tax? 75. So tax base is 75, carrying amount is 80. If carrying amount is more than the tax base, there is deferred tax liability. So 80 minus 75 is 5, income tax rate 40%. So 40% of 5 is 2. Here is one thing you must remember, that you can work out in different ways also. That I have charged depreciation 20, they have allowed 25, 5 rupees difference, or deferred tax liability also is coming 5. But here the emphasis is that everything has to be expressed in terms of assets and liabilities. In my college days, I used to think they want trial balance given, then some given adjustments, prepare profit and loss account and balance sheets. Okay. Now when I used to see the financial statement, they start with the balance sheet first. So I didn't quite understand. In first year, second year, we can tell you what they do think. They clearly say that assets, why do you prepare the balance sheet first? Because without even preparing PL, we can find out profit if we follow single entry system, suppose. So first, visually we see the changes in assets and liabilities, and balance we put in the PL. My Sunday debtors 10 rupees. Okay. Now I see, no, I can get 9 rupees. So put 9 rupees. 1 rupee going where? Bad debts. I measure the closing stock first. How much closing stock I will see, that I deduct from my purchases. So here everything expressed in terms of assets and liabilities, entire IFRS. Because they think that the basis of all accounting for this asset. Okay? Now, if you can see, what is the deferred tax liability balance opening? See the balance sheet. $56. Can you tell me how does it become 204 at the end? Opening is 56, closing 204. How does it become 204? Huh?
Deferred tax asset.
No, I talk about deferred tax liabilities. Deferred tax will come next. Deferred tax liability opening balance 256, closing is 204. How do we reconcile these two? This disclosure is necessary. First you see, deferred tax, you have the calculator with you? Mobile phone, something like that, anywhere. At least one of you must be having. Opening balance 56. Then you go to profit and loss. Deferred tax expense, deferred tax income, deferred tax liability, deferred tax asset. If you see tax expense after accounting profit, can you see? After accounting profit, I told you what? These 5 adjustments will be there. In the, PL, you will see only one figure, tax expense, and in the notes there will be these 5 things. How we calculate current tax, that you have to show. Then how these things are coming. Okay? Now this deferred tax expense 60 rupees, it is creation or reversal? Yes, very good. It is creation. What entry you have passed? Deferred tax expense debit to deferred tax liabilities. How it is closed? Tax expense debit to deferred tax expense. So 56 plus 60. How much? Now there are also 8 rupees deferred tax liability. What is that? It's an increase or reduction from deferred tax liability. It's a reduction. So minus 8. Okay. So 56 plus 60 minus 8. Okay. Now come to OCI. 96. This is creation or reversal? Creation. OCI deferred tax liability created through OCI plus 96. Next one, minus 8 intangible assets. Then plus 8. How much is coming? Total is how much? Is it coming? Can you do it yourself for deferred tax assets? I am following you, Nikhilji. Deferred tax assets opening and closing 72 and 148.
72 minus 20 plus 96.
That I don't know. Is coming or not? Am I right or wrong? If I am wrong, please tell me and rectify.
Right.
Yes, please. Is it coming or not?
Yes, sir.
Then it's alright. If it is coming, it is alright. Management by exception. Huh? Which one? Which one, sir? Deferred tax asset. Yes, sir. Opening balance is 72. Now deferred tax created how much? 96. First two things. When, sir. First, you remember. Look at the screen, please. Always be careful that deferred tax asset liability arising out of what? It is from profit and loss account or OCI or statement of changes in equity directly. Okay. Now, first, if it is created in PL, it is what? Entry is deferred tax asset debit to deferred tax income. Okay. Then deferred tax asset is going to the balance sheet and deferred tax income credited to tax expense. So here I am creating how much? Deferred tax assets 96. You see deferred tax income? If you can remember the first slide I showed you yesterday, what is creation and what is... Do they have all this yesterday's? Hey, Nitesh? Do they have this yesterday's PPT? No. They will get. It will be uploaded. Uploaded. So first two are creations, if you remember, and second two are utilization or reversal. So opening balance is 72 plus created how much? 96. How much is reserved? Reversed? 20. So how much is coming? 148. Acha, one thing I tell you, OCI, man, I am surprised to see. Really, it is beyond me. More than 30 years I have been dealing with accounting only. One thing I have not understood in my life, what is the meaning of capital reserve? This is beyond me. मेरा समझ में नहीं आया सर. ये बोलता है कि goodwill का वजह capital reserve क्या मतलब है मेरा समझ में नहीं आया. Maybe somebody can guide me. In Ind AS, first thing you remember, though other comprehensive income is a part of profit and loss, It is not a part of the double entry system of bookkeeping. OCI is not an account, remember this. It is just a statement. Journal entry is different. One asset, 10 rupees, revalued for 12. So that asset account debited by 2 rupees, reserve is created with deferred tax liability. Those things are put here to show that these are the unrealized transactions, unrealized gains that the entity has during the reporting period. These are the unrealized gains that they want to record. Because I will not be able to make out devaluation surplus 10 rupees, closing balance 50. How do I know what is created, what is reversed, what is cancelled, what is de-recognized? OCI will tell me. This is recognized, this is de-recognized. So I have seen in many places, even IFRS standards, they have passed journal entries, OCI credit, OCI debit. I am shocked. OCI is not at all an account. If you remember, one evening, one night, some gentlemen in Belgium, throughout the night, were sending email to each other just to make him understand you cannot pass this into OCI account debit or credit. There are separate journal entries: asset, debit, devaluation, surplus, deferred tax liability. Simple thing. Downward devaluation, reverse entry. This is one statement. Bank reconciliation statement. It is not a part of the double entry bookkeeping. Trial balance will have the balance as per this, not this bank, what as per the bank statement. Okay? Now, so deferred tax liability, deferred tax thing is okay? Could you please tell me, how does this 96 rupees deferred tax income? Yes. Yes. This 96. Can you just tell me, how does it come?
Revaluation increase of degree.
Huh?
Revaluation increase of degree.
Deferred tax asset, how can it come? It can come from what temporal difference, taxable or deductible? Huh? Deferred tax come from what? Taxable or deductible. That means expenses, if I have charged more, it will be a deferred tax asset. If I have charged less, it is deferred tax liability. I have charged 20 rupees as depreciation. Income tax department says you can have 25 rupees. So that is deferred tax liability. But if I have charged more, here you see where I have charged more. Can you see? Can you see the last statement that working? How we work out this current tax expense? 668. Last page. Current tax expense. You can look here also. What we add? Deductible temporal difference. What is subtract? Taxable temporal differences. Profits and gains of business or profession, same thing, nothing special. Okay? 668 is the current tax that is recorded here. You see 668 in the PL. Okay?
Deduction of depreciation of PP, which is as per tax, income tax.
Yes.
But we should add back the
Which one?
books, na? That is not here.
Net
realize. That's why it's.
Yes. Let me say KDI is ours, right? Ah. Yes, really, this is a designers to learn.
And I think
I appreciate. Very serious participant. Others also, I am not. It's not that. I am praising him only. Yeah? Now, one thing I ask you, what I told you yesterday. 668 is the. I am coming to this. 96 I am coming to next. 668 is the current tax. Okay? Go back to the PL. You see, what I told you? That deferred taxes, adjustments of deferred taxes make the accounting as per accrual basis. Yes or no?
Yes.
Huh?
Yes.
81 para 3 in this 12. One paragraph C. Paragraph C. चलो Yes, C1 you just C1 you see C1. This is the disclosure that is required. Devils are all in details. If you see the disclosures, if you know what are the requirements, that means you have learned the standard.
Can people see at the back?
Is it visible at the back? No. Come in front. Get some, hey. Zoom. To the extent possible.
So one thing I don't understand, how tax expenses you are giving the bracket income.
Is it better now?
You should have told me earlier. Huh? Opposite of this, tax loss. Opposite of this, tax loss. This you see what they say? What they say? You have three things in front of you. Look at the profit and loss. You see three things in front of you. What is what? One is accounting profit. So I reiterate, never use the expression profit before tax. That is absolutely nonsense. Even it is given in Schedule 3. You see, have they used profit before tax? No. Accounting profit, profit before tax expense. At tax basis is not the current tax payable. It is the aggregate of tax plus all adjustment for deferred taxes. So what? Three things are in front of you. One is your accounting profit, one is your tax expense, one is the tax rate. So what they say? You will have to prepare one reconciliation statement. So what? That you follow accrual basis. If you cannot follow accrual basis because of some problems, because there are some items are non-taxable items, some items are non-deductible items, remove those. Suppose your profit is 30% tax, so long-term liability. Suppose capital gains, what is the rate now? 10%. So it will not match what to show. So it is not be always on accrual basis. So first, see the language. Product of accounting profit. What is accounting profit? 1709. Okay? Multiplied by the applicable income tax rate, 40%. How much is coming?
668.
That should be equal to the tax expense. What is the tax expense? 644. Is it coming?
No.
No. That means you would have to prepare one reconciliation statement why it is not as per actual basis. What the reasons? One item given, you can check up on your own. I tell you, any transaction you pass, be careful about one thing. Does it affect my accounting profit? Does it affect my taxable profit? Does it affect either of these two? They affect both by the different amounts. Depreciation as per, Schedule 2 I have applied 20, as per tax 25. Audit notable effects. So what is the reason for this disagreement? This will have to show. It's there very much. Can you, any of you?
Other income dividend.
Yes, please. Who is, baap re baap. Very good. Now from 1709 you deduct 100 rupees. It is 1609 into 0.4. How much is coming? Is it coming now? Huh? Is it coming or not? 1709 minus 100 into 40%. It is coming? So always remember the conceptual framework. Otherwise it's very difficult. See the language what they say. Because this is a product of this, because it's a bare act, remember this. They need to cover everything. One word changes a different meaning to others. It's a legal bare act, one standard. Now what are the things that could come and that might include in your reconciliation statement? Suppose non-taxable government grants. Quite possible. It can be your impairment of goodwill. No tax adjustment, no tax consequence. It can be your deferred consideration payable to the subsidiary. You take one company, pay them 10 rupees and tell them I will pay 5 rupees after 1 year. See if you can pay that. Second thing is some other adjustments. Suppose tax rates are different. You have some foreign, this will be covered in foreign exchange, some foreign transactions, there are different tax rates. So there can be so many other things just to keep in mind that if it affects neither of this, because mostly it will be either non-taxable income or non-deductible expenses. Now, you tell me how this 96 is coming. For some things I have charged more than what is allowed by the income tax authorities. So first you see the effect is 96 rupees. That means 96 by 0.4. How much is coming? 240. Aggregate of few things have